Good afternoon, friends. We have an update with regards to a stock which is called Black Box Limited. It's a small cap data center stock engaged in delivering end-to-end IT solutions, including data center design, deployment, and management services, seamless connectivity, security, and digital transformation for global enterprises. Companies in focus after 29 to 39% net profit revenue forecast for FY26. 8,000 crore company guidance expects to grow across all key areas. Revenue target of 7,000 crores. EBITDA margin improvements to 9 to 9.2%. So expecting a net profit or a profit of about 600 crores, 600 to 650 crores before tax. So then you have a net profit estimate of about 265 to 280 crores. That is after uh, after tax margin of about 3.8% overall, aiming to have an EBITDA growth of about 29 to 30% or 30 to 40% uh, with FY25 comparison. Black Box Limited aims to reach about 18,000 crore revenue by FY29, which will be about 200% uh, growth in revenue compared to FY25. Company's revenue is expected to pick up in the second quarter of FY26, driven by improved pipeline conversion and higher with rates in enterprise deals. Order book 1,550 crores secured new orders in Q3 and so far the highest in FY25. Overall, the order book stood at about 4,300 crores, an increase of about 40 million means 40 million. 40 million is basically 4 crores. 4 crore dollars, 4 crore dollars into 85, it's about 340 crores. So it expects an increase of about 340 crores. Sorry, it's a 344 increase over the previous year, or you can say from the previous year comparison. Most of these new deals are large long-term contracts with clients in key sectors like cloud services, healthcare, airports, education. Additionally, the managed and maintenance services segment saw a strong increase of about $61 million, helping the company achieve more stable revenues and profit margins. The company is founded in 1976, global leader in digital infrastructure solutions, specializing in network and integration and managed services and technological products. The company serves a wide range of industries, including financial services, healthcare, retail, public services, and manufacturing. Black Box operates worldwide with a presence in US, Europe, India, Asia Pacific, Middle East, Latin America, supported by 3,600 professionals and strategic partnerships with leading technology providers. The company offers end-to-end solutions in network integration, digital connectivity, infrastructure, data structure build-outs, modern workplace solutions, cybersecurity. Its product portfolio includes advanced solutions in audio, video, AV, Internet of Things, IoT, KVM, networking, infrastructure, and cabling. So, important disclaimer before we look at the financials: this information has been articulated, extracted from the internet. The investment opinions and recommendations are of the expert houses, broking agents, and various rating agencies. These views do not reflect personal opinion or advice. Stock market investments carry inherent risk of financial loss. Investors must exercise their own judgment and conduct proper due diligence. The author bears no responsibility for any losses resulting from the decisions based or made out of this article. It is strongly recommended to consult a financial advisor or broker before making any investment decisions. So we'll look at this is the logo of the company. It's about 8% down in the last 5 days, 2.7% up in the last 1 month, 29% negative return in the last 6 months, and overall an 81% return in the last 1 year, which is an excellent performance by this company. Overall, AGC Networks incorporated in 1986 by Tata Telecom Private Limited to manufacture telecommunication equipment. It is currently held by SR Telecom Limited. Over the years, AGC evolved into an information and communication ICT solutions provider and integrator with a differentiated vertical approach in business communication systems applications and services mainly within India. The company is present at multiple geographies: Middle East, Africa, North America, Australia, New Zealand, Singapore, Philippines, UK, servicing over 8,000 customers. 479 is the current price, high of 716, price value 2 rupees, no dividend payout, book value 45 rupees. So company is 10.5 times its book value, uh, return on equity of 43%, CAGR compounded annual growth rate of 23% in the last 5 years on the profit front, and a good return of 37% return on equity in the last 3 years. Negatives: 10 times the book value, delivered poor sales growth of 3.6% in the last 5 years. Tax rate is low. You can see the stock revenue has been gradually increasing in the year, which is a good sign, and the net profit has also grown, which is again a good sign. On a year-to-year comparison, here the revenue has been fluctuating and it is lower than the previous year. In terms of net profit, it has been the best year, and the last 2 years have really been good in terms of profit growth for the company. So it's a good positive, news. Profit growth in the last 3 years is 51%. Current year is about 61%. Return on equity is 43%, which is at par on an average in the last 5 years. Stock price growth of 83%, which is an excellent return of value to the stock and the shareholders. Reserves have increased by about 270 crores, which is a good positive sign. Here, borrowings have also increased. Higher borrowings lead to higher interest costs and impacting the overall profitability of the company, directly impacting the overall financial year ratios, financials. Overall, current liabilities, other liabilities have reduced, which is a good sign. Debtor days have increased, inventory days have reduced, days payable have reduced, which means that the company is better able to manage its payments to suppliers and creditors. Cash conversion cycle, uh, the efficiency has reduced, though still the company is doing well in terms of cash conversion cycle. Working capital days have drastically gone up, which again represents that the stock held as work in progress or raw materials, it's taking time to get converted into the active conversion cycle. So the return on capital employed has been good, between 26 to 29% on an average in the last 4 years. Promoter holding of 70%, which is good. However, public holding stands at 25%, which puts the stock at a highly volatile in terms of price and in terms of volume as well. So, friends, thank you for watching the video. Please share this with your friends, family, and associates so that they could benefit from this information. Also, please leave your valuable comments below the video in the comment section with ways to improve the overall content and the presentation of the videos. Uh, Thank you for watching once again. Have a good day. I will connect with another video very soon. Thanks for watching once again.